Second. Okay, cool.
All right, I think we're live.
Okay, cool. Hi, everybody. It's so far it's me and you, Robert, but um, I am excited. I am excited definitely to be doing this with you. Robert Falco has been one of my biggest inspirational mentors. Um, I have looked up to you for a very, very long time. Absolutely. And you've taught me everything I know about macro economy, just in general. And sometimes I tend to bother you with a whole bunch of questions, but really, you are the best man out there that I could go out and ask for this interview. So I feel honored, and I'm so excited to be doing this with you. So thank you so much for agreeing on such short notice. I really appreciate that.
Oh, it's my pleasure, and thank you for the wonderful introduction. I do my best, and that's one of the things that I've always liked in finance. My banking background to trading now is just helping try to make things simple for people because I think the industry as a whole really tries to make it difficult so that you'll pay someone else to just do it for you every year. So yeah,
Yeah.
that's really good to hear.
So Robert, so how did you get started? I know you have a ginormous background in the banking industry. How did you get started?
Yeah, so I started like when I was 19, I started as a teller at a bank and I worked my way all the way up to a senior vice president. I was with a bank for almost 16 years and then they did some restructuring. I ended up getting laid off and basically my boss and I had to like compete for the same job and he stayed. I got laid off. I had a nice severance package. I reached out to Jeremy and I was like, hey, I had already been investing, but I started trading a little bit. And I was like, hey, Jeremy, I need to learn this stuff because I never want to work for anybody else again and have, my future like dictated by some, HR, like spin the wheel, who are we going to keep, kind of thing in a corporate office somewhere. I never wanted
Yeah.
that to happen again. So that's when I started my journey on trading full time and
Yeah.
making sure that I was able to sustain myself, like with my own investments, that kind of thing.
It's so amazing how you can how trading allows you to do that. And it's also amazing how when I meet most people that say, "Oh, I want to quit my job and become a full-time trader," um, oftentimes I will see them turn into day traders and very quickly give up on it or actually get really frustrated and either try to learn or fail at that. You, my friend, on the other hand, are extremely different. You as a matter of fact, are very knowledgeable. You're like a bank of knowledge when it comes to, you know, you're my person to go to when I have a question about just generality in the out there in the market. Um, and it's just a complete different scenario with you. It surprises me, and definitely you're definitely one of the traders that I certainly definitely look up to.
Well, thank you.
Uh,
That's good to hear. That's good. I like everyone likes hearing that stuff. And again, I don't know everything, but that is something that I've just always wanted to know how things work. And so, like market structure, how brokers work, how orders are sent, like all of that kind of stuff, always really interested me. And it's one of those things that, like, yeah, day trading is probably like the hardest as far as if you're going to trade the market. Like investing long term, pretty easy. Swing trading is a little bit more difficult. And then I think day trading is probably the hardest to do the most successfully, just from a standpoint of when a lot of people, like you said and I said, full-time trader, if you come from a background where you're like working a normal job, like, oh, I'm a banker. So when I'm at work, I'm doing banking stuff. Well, as a trader, when I'm at work, I'm looking for trades, but I need to only be looking for the best setup, because sometimes there's just not a great setup for the strategy that you're using. Sometimes there's not opportunity, that you have
Yeah.
an edge, because otherwise you can gamble all day long and just flip coins, but that doesn't have an edge over the long term. So it's a lot of waiting. And if you're sitting in front of the computer for multiple hours and you don't find a setup, like, that's okay. But a lot of people think, oh, I'm a trader, I have to be trading all the time. At least for me, that was like the hardest thing about becoming a trader, was I felt like I had to be trading all the time. And that's why I think day trading is the most difficult, because it involves a lot of waiting.
Yeah, it gets boring. I also get asked that a lot. So everybody assumes I'm on a lot of coffee. And just in general, if you meet me, I have a very jumpy, anxious personality. So everybody just naturally assumes I have a very like stressful, anxious, crazy day trading life. And I'm like, no, it's a really boring waiting, watching kind of game. It's
Yep.
not as crazy as you think. Yeah, it's just everybody has these different assumptions. Well, while I have you on the microphone right now, I'm going to take advantage and ask you. So I got asked this question on social media last week, and it was about how do we find, what do we look for fundamentally in a good company? While this is a very broad question, I know you're the man to address this the very right way.
I'll do my best.
Okay, I'll let you take over from here.
All right. So one of the things that I use, let's see if I can share my screen. It says, I think you just need to allow me to share host disabled participant screen sharing.
Let me see if I
Um,
can share.
but FinViz is a great screener. There's tons of screeners out there. When you look at fundamentals of a company, there's lots of different things to look at, but you want to make sure that you're comparing apples to apples. So, like, if you're trying to compare a software company to I don't know, like a steel manufacturer, the fundamentals are going to look completely different. So you want to compare apples to apples to make sure that the fundamentals that you're looking at like actually matter. So let's see. Okay. And are we still alive? Yeah, it looks like
Yep,
it.
I can
Okay,
see your
cool.
screen.
So I'll come over here to FinViz. This is a free website. They do have paid stuff, but you don't really need that. And up here, search ticker, company, or profile. So let's just go over. I'll just type in Google. They had earnings yesterday, so I'm not sure if FinViz has updated their stuff yet. Let me see. I don't think so. I think it takes a couple of days, but we'll just go into the basics here as far as what to look at and what is what. So right here you have which index it's in. So it's in the S&P 500. Over here you'll have the sector. So it's in communications, internet, and content information. If you click these, let's say like I click communication sector, it's going to give me a list of a bunch of different other companies that I can start going through. And that's how you can compare a little more apples to apples. But obviously index, your market cap, pretty basic stuff here, but I'm not sure if everyone knows all of these. So that's just what the total company is worth. All the shares multiplied by the price per share. That's the market cap. Income. So when you're looking at, does a stock actually make money? This is what you want to look at. Again,
Right.
I'm not a financial advisor, so take this with a grain of salt. But in my opinion, right now, you do not want to own a lot of companies who have a negative number in this little box. So if the
Right.
company is not making money, maybe there's some speculative part of your portfolio that you could throw some money at some of those companies. But for the most part, right now, in the market that we're in, this has got to be a positive number. So, like for Google, this instance, they make $76 billion. Here's their sales, it's total revenue. Again, I'm not going to highlight all of these. We'll just go over some that I feel like they really matter. Obviously, if there's a dividend, You'll look there.
So
If
with the whole market being kind of iffy in general, would you be leaning more towards so I for instance would be leaning more towards companies that make, well, I would want to filter out the companies that make more income than, or at least somewhat evened out with their market cap. Or is that so? What I'm trying to ask is, so I know the growth companies, so for example, Google would qualify as a growth company because their market cap is so large versus their income or their sales comparatively is fairly low. Would you be looking for something slightly different that's not qualified as growth currently?
Yeah, I mean, right now, I do think that there's some value stocks that have already, like, we'll look at a couple here in just a second. I'll compare
Okay.
one to Google. That'll hopefully answer that. But yeah, I would say Google is growth tech. Obviously, it's in communication services, information technology kind of thing. It's one of the mega caps. It's worth 1.7 trillion almost. Right here, your PE. So this is the top one is your trailing 12 months. So that means it's the earnings for the past 12 months. And then your forward PE is going to be next fiscal year based on their projections and growth rate, like what it would be. So if you look right now, just fundamentally, Google looks pretty cheap to me. The whole S&P, I'm not sure if you can look that up on FinViz, but usually I just Google it. It's trading around 20, 21 times earnings.
Mm-hmm.
So Google is pretty much right in line with the S&P, basically giving it so it has no premium over the S&P. And then forward PE for next year, it's trading at 17 times earnings. So I know a lot of people got hooked on this like price to sales thing, which is over here. That's just price um, and their revenue. So like this number, the sales number, I wouldn't really look at that right now because if they don't have a PE and they only have price to sales, then obviously the company loses money, and I don't want that right now personally.
Right.
So I would look at PE and forward PE, and then growth. Like if you look right here, here's your sales quarter over quarter, earnings quarter over quarter, and then if you want to go on the company's website and look at more like year over year data, you can definitely do that. There's also some next 5 years, last 5 years, so you can see like has the company grown? Is it continuing to make money? All the answers with Google is obviously yes. Profit margins are in here. So this is their gross margin, operating margin, and then profit margin. So again, this number needs to be positive for a profit margin. Otherwise, they're not making money. Kind of like an Uber. Pretty sure that has a negative profit margin. Like it's just not a profitable business. It's not something I want to really invest in. You can day
Yeah.
trade whatever you want, but for more investing type stuff. So let's go over and compare to like Procter and Gamble. So that's Google. So Procter and Gamble is not a quote unquote growth company. I mean, it says it right here. This is more defensive. So consumer defensive. This is like consumer staples, household and services. They make shampoo, soap, like all that fun stuff. I mean, they have like
Yeah.
a billion different brands, right? Well, this is they pay a dividend, so like that's cool. But look at these forward PEs. So this was considered more of a defensive name, more quote unquote value stock. Well, at this point, Procter and Gamble, you can look at the chart over here. Like it's gone up so high, from over in this area at the end of last year. It's gone up so much that now you're actually paying more. Even let's just go to next year because the market doesn't really care what happened in the past. It's constantly trying to predict the future. So if you look at the forward PE, like the forward PE is 25. So that's eight. What was it? Yeah, about eight more than Google. So Procter and
Yeah.
Gamble is you're paying a PE eight higher than you are for Google, which is growing at what was it 30+%, almost 40%. And look at the and again, Procter and Gamble is a great company, but it's like at this point, it's pretty expensive. Yes, it does pay a dividend, but sales quarter over quarter 7% versus 30%. Again, those operating margins and profit margins were like 30 and over 20 on Google. So Google's a more profitable business, growing faster and trading a lot cheaper. It's like, what do I want to buy? Well, as of right now, like I would rather buy Google over Procter and Gamble.
That
If
is
Procter and
so
Gamble was down
interesting.
here, it'd be different. But
Yeah,
it's
I
already
would
been bid up.
never.
So
Yeah, I would never have thought of looking at anything that way, especially comparing Google and Procter and Gamble. But because I mean, it would just never even occur to me to compare their forward PE and their PE ratio. Which, by the way, everybody that's watching out there, to anyone that has a question about PE, that's just price to earning ratio. And yeah, I would never have thought of this chart. One can look at it and be like, oh, this is an inverse head and shoulders, or a double top, or a perfect time to buy a put, looking at the past two candles currently on that chart. But I would never have thought of that. That is such a cool way to analyze on Finviz. That's interesting. Tell us. So what's next, Robert? Show me
yeah,
more.
so
I'm
like I
excited.
try to combine the fundamentals like with some chart stuff. So obviously Google's gapping down this morning. Am I going to come in and put all my money in Google? No. Do I have some limit buys floating around? Yes, because I thought Google's earnings, while I think YouTube was a little short, for the most part, they were still pretty good. The fundamentals on the company are great. And again, you look at that forward price to earnings. So I just want to make sure that I'm like buying into good support. Um, I mean, I would love to get it down around 2000. Anything can happen, but if I can combine those fundamentals with the chart, whereas again, Procter and Gamble looks expensive fundamentally, and I look at the chart and it is like way up here. So, this thing traded in this channel for a while. It broke out. If we were having this conversation over here, and I'm like, hey, Procter and Gamble's fundamentals like look pretty good. It's a defensive name, and we start holding the 200, and maybe around in there, I'm getting into a position and trying to ride it up. But yeah, once it's up here, and I already know it's expensive, I'm selling calls. I'm buying some protection, put a collar on it, or just trailing my stop up, something like that. So I like to combine those things. And then again, just looking at different sectors. So let's go over to like energy, because energy has been pretty hot right now. So this is just Chevron. So if I go in here and I take a look and I say, okay, in the S&P 500, obviously Chevron's a big one. They make money. They do have a dividend, 3.6%. I look at some of these PEs like this. If SPY's at 2021 and the PE on Chevron is 19, it's trading at a discount to the S&P 500, so it's cheaper. And then if you look at the forward PE, it's only 13. That's like really cheap. So even though Chevron, if you look at the chart, has had a really good run, it's pulling back a little bit. If we get setups down in here, yeah, let me just go over to this because it's easier to see versus the Finviz chart. But if we get setups over in this area, where like you get this hammer candle, and then if we throw in a couple inside candles and then break out, like I'd be more willing to go long, even though it looks like a bit of a double top. But I'd be more willing to go long on something like this because it is in a strong trend, and just valuation wise, it's trading cheaper than the S&P 500. You price to free cash flow, something else that I look at. Obviously, with oil prices up, you look at their sales quarter over quarter. You also have to kind of guess, like, is oil going to continue to stay high? Is it going to really come back down? Those kinds of things that you have to think about. And if you don't like this one, then maybe I just come back over to oil and gas and I click on this. And then I start looking through some others and I go, okay, what about BP? Let's click over on BP. And I see this one. The US isn't the primary market for this, but market cap's 96 billion. So not a small company. They do make money. This one's even cheaper from a PE standpoint, pays a little bit more of a dividend. Also, going to have very similar sales growth just because of the price of oil. And I go look at this chart and I'm like, well, maybe I think this chart looks a little bit better, a little more of a steady climb, yeah, in this channel. So maybe I want to play this channel and look at trying to pick some up in here and then start to sell as it gets up in this area. Just kind of depends on what you want to do, but that's how I want to compare stocks is in the same sector. So I want to make sure if I'm looking at oil stocks, I'm not really comparing like Chevron to Google because they're just different. I want to make sure that I'm looking at similar sectors if I'm trying to pick one particular stock out of, all of these oil and gas stocks.
Yeah, absolutely. So, Robert, I know that you know this because I've made it very well known to you, but you made a list very long time ago. While a lot of people did not know about, the fact that maybe Teladoc and Zoom and Roku are not valued at where they're trading, and you would share that with the real life trading community, and I think I've profited so much from your list of stocks that you
Nice.
thought were trading, that were valued, that were overvalued. At a certain point, due to COVID, and 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 I have absolutely enjoyed that. What do you think are certain stocks that are currently undervalued? Do you have a list for that for our viewers currently, or
Um, I still think energy is obviously trading at a little bit of a discount. Generally, the energy sector like doesn't grow. So like we were looking at that um, Chevron or even BP or like this is Suncor, but sales quarter over quarter is usually not that strong for energy. Obviously, because oil went up, right? Their normal, their revenue is going to go up. Doesn't mean they're necessarily making more money, but if a barrel of oil goes from 50 to 100, well, you just doubled your sales. So because it's linked to the commodity. Well, when oil was like really really cheap, it obviously was not going up to these huge numbers. So generally, oil doesn't grow as fast. So that's why some of the energy stocks they are probably never going to trade at like 30, 40 times price to earnings. But I think they do still have a little bit of room to grow. Utilities, actually, it's not going to let me do that. Let me go like EIX. So Edison is a utility and come in here. So utilities, there's a lot of these very similar. They've had a big run up, but if you can go through here and find some individual ones that you like, or you can just go to the sector. So for some of the ones like XLU, I probably wouldn't do all the work of trying to find one. I would probably just buy the index. So this is the sector spiders utilities. So you can go to sector spiders. I don't know if it's sectorspiders.com, but this is the list of the ETFs that like break out each sector. And so oftentimes if there's one that I don't really know a whole lot about, like utilities, I'll just play the XLU, maybe even sometimes XLE. I don't want to buy an individual stock in there, whereas like I'm more picking and choosing on tech. But XLU could be one. XLRE, the real estate's generally a good hedge to inflation, still in the strong trend. Would I buy it now? Probably not, but see what happens as it comes down into the 100, 200. But overall, like, I don't necessarily have a list of those like off the top of my head. I do think some of the car manufacturers are trading relatively cheap if the EV stuff. Problem with EVs right now is the batteries are just so expensive, but I do think like a Ford, trading at a half price to sale or like 6 Ford PE or 3 PE, like that's super super low. It's not going to be a Tesla at 56 or 100. Like my opinion, Tesla's just way overvalued. But even if this was at 30 or and 50 or something like that, like Ford is not going to be that. But could it be 12 or 10? It definitely could be. Same thing with
Absolutely.
like a GM. Like, could this be a little bit higher just on what's called multiple expansion? So just if the market starts looking at these things like, hey, you know what? Maybe they're worth a little bit more than their current sales because they do have like $100 billion in sales and they are making money. So is that worth a little bit more? Maybe it's worth 10 times just based on multiple expansion. Some of these things could have some legs to them. You know, I don't know if they will or not, but they could. And then also some of the materials. So like new core, anything that's being impacted by like the Russia Ukraine war. And not that we want to like take advantage of that, but as traders, like our job is to try to find opportunities. So like steel producers. So this is Nucor, 14 times forward earnings, PE of 8.4. So some of these material companies, maybe a US Steel. Oh, maybe I'm going too fast. You know, like this one, Mosaic. This is Basic Materials. They do a lot of fertilizer. So this is one. I'm actually in it right now. I'm in Mosaic. I bought with this little hammer, and I have a stop down in here. But this is a fertilizer producer. So forward PE of 7, as you can see there. Where else are you going to go to get fertilizer? Unless everything. Oh, Russia is a big fertilizer producer. They make money. They have a small dividend. Like something like this, even though it looks like it's really high, the market is now starting to expand the multiple on this because of other issues going on.
That is,
CF, I think, is another one.
I would have never thought of Mosaic. It's not because it doesn't have the glitter, the glitz and glamour
It's not
around
flashy.
it.
Yeah. Yeah.
So I would never think. I remember Jeremy saying, "We're going to have issues with wheat and corn and all of these other grains because Russia and Ukraine conflict and all of that." And so I remember having this conversation specifically with him, and we just I never acted upon it. I mean, it just never came to me to look for a fertilizer company. How amazing, how smart is that of you to go look for that? That is so cool. I'm gonna go look up some companies and expand. Usually what happens is I put myself in a box. So whatever FinTwit has or offers. For example, obviously Tesla is a pretty popular ticker on FinTwit, and Tesla, a couple of other companies, here and there, I'll just pick on it and I will put them in a box and I will just act upon it. That's it. So
Yeah.
I'll look for day trades around it. I will not expand my horizon. And that's what, so when the war talks were going on, and I know, not to benefit from it, by all means, I don't want to, but as traders, like you said, we were looking at Lockheed Martin in our rooms, and I thought, that's a pretty good defensive stock to be looking at.
Yep. Yep.
So, yeah, that was a wonderful trade that we all did, bullish, and now maybe with certain news coming out, we might trade it bearish. But yeah, but this is so amazing. I hate it that we just kind of put ourselves in this box and just trade certain tickers and not expand uh,
Yeah. Yeah.
out of it.
So yeah, here's a whole list of agricultural inputs if you want to find other ones, that. And if you only know one, like, oh, I only know Mosaic, then I can just click here and then start looking through some of these others. Another one is some of the food producers. Um, whoops. A friend of mine, I was like, I'm in CAG. He's like, ConAgra. He's like, don't they do bird's eye, like the frozen vegetables? I was like, yeah, they do. But like, look at this thing. I mean, it was down over here, but this thing is up tremendously. It's been a heck
Wow.
of a little run. And again, trading at a discount. People need food. If there's going to be food shortages, what do you think they're going to sell? They're going to sell a ton of frozen food. If people think there's going to be food shortages, they're going to go to the grocery store and they're going to stock up on some of this stuff. Or with inflation, if every time you go to the grocery store things are more expensive. Sorry, that was the TOS bell going off. But
You're
if everything's
fine.
more expensive, then each time you go, you're probably going to buy a little bit more because the next time you go, you're thinking, hey, it's going to cost me even more. I might as well buy a little bit more now. So that type of stuff is like where you can spot, some um, extra tickers to look at. Doesn't mean you have to trade them, but hey, at least you can start looking at some of these things. Or like heck, Campbell's soup. Again, this traded up quite a bit now, but if you were looking down in here and you can combine some of the technicals with some of these fundamentals, it's still trading at a discount. They do have a dividend. Sales growth's not real great, but it's you're not going to lose 70% of your money, in a Campbell's soup. And yeah, I just think the market is kind of over as far as the whole like, oh, I'm going to quadruple my account every year. Like, I think that's gone. Like, it was great the last 2 years, but that's probably not going to be happening.
I cannot tell you how many people I have met over the past couple of months that have told me, oh, 2020 was phenomenal. I've made so much money. And now I've come back, I've shifted back to reality and I've lost it all, or I'm trying to regain balance and actually learn for change trading. Um, it just blows my mind. It definitely surprises me, which leads me to my next question. With the markets being the way they are currently, would you recommend looking at certain dividend paying stocks, or are you leaning more um, towards still equities? I mean, just non-dividend. What I'm trying to ask is, would you rather be buying bonds? Would you be in the bond market, or would you be investing in the dividend stocks?
Well, with rates going up, like bonds are having their worst year ever, pretty much. If you pull up the AGG, it's kind of like the spy for bonds. If you just want to look at like an ETF, that's kind of like an index, and this thing is literally going like straight down. So you want to be really careful buying like some of these bond funds, because if rates continue to go up, these things are just going to keep dropping like a stone. And primarily, it's the speed at which it's going up. So as rates go higher, oops, I wanted an arrow. As rates go higher, the price of this has to go down, and as this goes down, rates go up. Eventually, that yield will get some people's attention, but for right now, I would probably steer clear of some of these. There's some I bonds you can buy from Treasury Direct that are yielding like 7 or 8%. It's a limited amount that you can buy, but you could look into I bonds. I bought some of those. Some of the other traders have bought some I bonds. But right now, I'd probably steer clear of like the bond market as a whole. Maybe some like if you can find individual company bonds, but that takes a little more like digging. I do like dividend paying stocks. Verizon is something that's been trading in a channel for a while, coming into the bottom of this like current channel. I mean, could it trade all the way down here? Sure, it could, but this thing's yielding over 5%. Am I gonna have my whole portfolio in here? No, but if I have 300 shares of Verizon on a longer term account, and I'm getting paid 5% dividend, and then when I get the opportunity, because every stock, especially this one, it bounces around quite a bit. So if I get opportunities to sell calls like all of these, I could have sold calls on those spikes, and then I either just get called away or I keep my shares and keep the dividend. But yes, I would much rather have a dividend and hold through a market that is doing this than try to buy something like, I'm not saying you can't buy PayPal, but this has no dividend, so you don't get paid to wait. If this thing goes like this for a year before it starts to go back higher, this is just dead money for a whole year.
Yeah,
And the
yeah.
likelihood that it's going to do this is pretty much zero. Like, it's probably not going to do that unless the Fed starts printing $100 billion a month again. Like, that's not going to happen. And so any of these stocks that are just down massively, there's probably like PayPal will probably come back at some point, but it's going to take a while. Or like a Square. Like, I am buying some Square down in here, but I know that, hey, this is either going to be something I'm going to have to trade around, and it's only a certain chunk of my portfolio. So I'm not saying avoid growth tech altogether, but it's probably only going to be a certain chunk of my portfolio. And the rest, if we do enter a choppy, downward kind of trending market, I mean, you don't want to be all cash, right? Because inflation is 8%. So would I rather have a 5% dividend? Yeah, I would. So yeah, I like dividend paying stocks. And there are some like Johnson and Johnson is one of my largest positions. And I mean, like, look at this thing. It's practically at an all-time high, and it's paying a dividend, $1.06. Even if you have 100 shares, I think they actually raised it. Yeah, it's going to $1.13 for 100 shares. I mean, that's 113 bucks. If you have 1,000 shares, then that's $1,000 worth of dividend. I mean, it scales depending on how large your accounts are, but there's stocks that are still grinding higher in good trends and paying you a dividend in the meantime. And you do have options to, sell covered calls. I was hoping for one or two more updates on J&J. So a
No,
call.
I agree. Absolutely. So you have 100% inspired me into holding, or actually, you were one of the first ones to talk me into having a long-term account.
Nice.
Um, I was not up for it at all. So I just wanted to day trade and just and it's when you've found this thing that works and this strategy that works, why do you want to go do anything else? Right. So um day trading was my job, and I didn't want to do anything long term. But you one time said just buy one share of SPY, just once a week. That's it. And so I kind of kept up with that. And it's been a while since I've been doing it. Just once a week, I'll buy one share of SPY in my long-term account. And I every now and then I will buy. So I have like 2 shares of PayPal and 3 shares of Square. Every now and then I'll go in and buy something. So recently Disney came out with some bad news, and it's Disney. I mean, I don't think it's going anywhere. Again, these things are my long term holds.
Hmm.
I'm in my 30s, and I don't think um, I'm going to sell it at least until I'm in my mid 50s. I'm hoping not, or 60s maybe. So I will just keep accumulating. So for those of you out there listening and thinking, oh, my account's really small, what can I do? I started my long term account, guys, with $500. It is currently sitting at solid 17,000. And I mean, really, it's just, I will buy one share here and there, and it just grows. That's it. And Robert Falco was the only person that ever pushed me in that direction. So thank you very much for,
Oh, that's awesome to hear. That's awesome.
yeah, it's and it continues to grow. So every now and then I'll buy, like Disney, for example. I mean, it was, they came out with recently, they had some lawsuit with the I don't know
Yeah, they're
what's going on.
battling Florida right now. Yeah.
Yeah, yeah. So just then I was like, oh, this is looking good. Well, chart wise, it's not. It's looking like a massive head and shoulders. And I think it could go a lot lower. But for 1 or 2 shares here and there, I'm like, okay, cool. Keep adding to it. Um, I added Square and PayPal. PayPal, I'm actually not very proud of because I bought it pretty high up. But again, if they went to zero, I'd lose like $400. So it's
Yeah.
not it's
Yeah.
not a big deal. Like it's okay. So yeah, but these things, I think it's a very good way to grow a smaller account. And sometimes we get caught up in the fact that, oh, we have to grow it overnight. I wanted to be a billionaire with a $30,000 account like the very next day.
Yep. It's all about expectations. That's so true.
Yeah, yeah, and sometimes you forget to run the slow race, but it's so important, which is why so many of us do not know why FinViz and these other resources out there are so important to research companies and to invest wisely. So when you mentioned your list to me and you said, well, does it make money? When you mentioned ARKK, for example, let's talk about that. I was a big fan. So my puts at one time, I think they were up. I want to say. I mean, they were up quite a bit. I'm out of them now, but I made pretty decent money on that. And I've never been able to swing trade puts. How amazing is this market?
Yeah,
So,
yeah. ARKK, you know, I know Kathy Wood gets a lot of hate, and I don't want to like feel like anyone to feel like I'm just bashing on her because it's an easy target. But I mean, this chart is the epitome of what like a bubble market looks like. So you have this like parabolic move up, it pulls back, everyone thinks it's going to bounce again, chops around, fails. People start to get worried that they try to buy it. They try to buy it down here, then they're in denial. It breaks again. I mean, this thing is probably coming all the way down into the 30s or 40s. I'm not still short on it. I haven't bought leap puts. I don't think ever. I mean, maybe I had bought like one or two like on a long term trade, like as protection for the year or something. But I bought leap puts on this. Gosh, this thing, I think it was right as it was breaking down right here. It was right around $100. Maybe it was right here. But I bought leap puts on ARK. I bought some shorter term ones too. But those puts, like when I exited them, like over in here, um, it was like a 2,700% gain. So yeah, like ARKK was a fantastic short. You can definitely make money shorting things. Um, but it's one of those, like, my expectation was not to make that much, but since it was working so well, it's like, hey, that's awesome. Let's just go
yeah.
with it.
Well, it was so what amazed me the most was so it was something as simple as you pulled up her, you went onto the website and you said these are her holdings. It's something as simple as that. And to an average person like me, it would never occur to me to go on and say, okay, well, what's her holdings? And you would look at those and you would think, oh my goodness, how is this
Yeah, what are they?
company?
Why are they in all this stuff?
Yeah, yes,
Yeah,
certain things that like she has so many shares of Roku and CRISPR. I is it or Zoom and Coin and Square, and I thought it was, yeah, I thought it was
yeah.
just
All of these
mind
are
blowing.
big giant dumpster fires of cash. Now,
Yeah.
Zoom is actually like they are making money now. It's just the hard. Sorry, I was a little distracted. I got in a Google day trade here. Um, it's looking good too. Zoom is making money, but it's one of those things where it's like, well, who is? And we're using Zoom right now, but who's going to get on Zoom that's not already on Zoom or have been on Zoom? I don't really know. But like Teladoc, I mean, just dumpster fire of money. Roku, Coinbase, one of the worst IPOs of all last year. So it's like, yeah, to me, it felt like it was such an easy short because like she keeps buying more of these things that just keep going lower. So it's like, why wouldn't I short it? I mean, this is like the hugest double top I've ever seen on Roku. And this is one that I also like. I'll go over. I'll show you guys another cool thing. You can look at insider buys and sells on here. I think Anthony Wood, I don't know if it's Kathy Wood's cousin or what. This guy has never bought a share. Like the CEO of the company, he's never bought a share. All he's done is just sell. And look at when it was high up, when it was at like 400, he was unloading like 300,000 shares. Like this guy was selling the rip.
It's
So,
like he himself knew that this was not worth it.
yeah, exactly. Exactly.
Wow, that's insane.
So
Yeah,
that's
that's
another thing that I'm like, well, if the CEO is just constantly selling, why if he doesn't believe in the thing, like why should I? And then like, Kathy just keeps buying or like stuff like this, like she keeps buying Path. Like this or this DNA, so then this is like a penny stock now. I mean, I don't want to be in any of these trends and then companies that are just losing money in this environment, like no, I don't want to be in any of these. If I like crypto, I'll just buy the crypto. I don't want to own Coinbase.
point. Yes, yeah, that was another thing that I mean, what's the point of owning Coinbase. I get it for day trades. It's a cool, fun stock to day trade, but I mean, for a long-term hold, it makes no sense to me. Um, Same exact thing as Robinhood. It's like, well, what's the point of? I mean, I guess growth potential, sure, whatever. They tried to be the next cool thing, and I.
This was fun. I mean, I traded this. That was fun.
You also bought it down. I think when it hit like
I
nine
did buy it over
something.
here, yeah, but
Yeah.
I sold it in here.
I remember that, and that was pretty cool. Somebody asked me how low it can go, and I put fibs on it, and literally went to like the 1618 extension, and I'm like, realistically, it could go to $1.60, $1.60.
Oh,
Um, doesn't have to, but it could. I mean, currently it's at 994, and it's looking like a head and shoulders. So it doesn't have to. I don't think Hood is going to you know, um, zero. But it just baffles me sometimes, like certain
according to this, it can
tickers.
go negative. Yeah, I mean,
uh,
I don't know if this would be the fib extension that I would draw, but like just loosely, if I use that one, a 100% extension is all the way down to $2. I mean, that would be brutal.
yeah, that would not. No, that would not be fun. Absolutely no. And look at all the people that have bought it at. I mean, I'm sure there's still bag holders. There's still people still believing in it, and there's something wrong with it. I could see it working out. I could see potential in Hood. I just I just don't think currently we're in the right environment to be investing in certain tickers
Yeah,
like
yeah,
Hood
exactly.
specifically.
Yeah, you nailed it. I mean, there's a season and a time for everything, and this is not the season for losing money. Growth at any price type stocks. It's not. It's GARP, growth at a reasonable price, or you want a company that's got free cash flow, makes money, pays dividends, buys back stock, like all of those types of things.
Absolutely. Look at While I have you here, look at Boeing. That's sinking hard.
Uh,
Um,
yeah, let's
it's
go. I just sold Google, so I got in down here. And then I had a stop. I put my stop like below,
what a power trader.
and then I
Um,
just got out right there. I don't know. It might go a little bit higher, but threw in that upper wick, right into here. So I'm just gonna take the gain and made some money while we were chatting, so that's good.
that's awesome. That's
Okay,
amazing.
yeah, Boeing is like pooping its pants big time.
I was hoping
Ugh.
for one green candle on Boeing and just
Ugh.
nothing. Just nothing. Not even like a retest. I wanted a retest to short it, but it's in this channel also that it seems like it's breaking down on, kind of. Or maybe
Yeah,
not. Maybe it's coming down on this channel. So tomorrow might be a very fun day to go bullish on Boeing if we have like a bullish day tomorrow. It's done that previously. So if you go back to like where your let me see if I can annotate on your screen, like
yeah, I
here.
think you can.
Yeah.
Over here, yep.
Yeah. Yeah. So if you go back there, it's done that previously where it looks like it's kind of breaking down, but then it just, yeah, or like even over here where it looks like it's kind of breaking down, but then it just kind of bounces back up again.
Yeah, it's had a lot of like false breaks of descending triangles, but I don't know. This thing is just constant bad news, and yeah, we'll see what. I guess they're. Did they have earnings this morning? Yeah, I guess they had earnings
Yeah.
this morning. I didn't even look at it. Apparently,
Yeah.
they weren't
They
good.
they were
Apparently, they
not
were
good.
not good.
No, no. Another fun one that I thought was interesting was NSC, Norfolk Southern Corp. Um, that was a pretty sweet one. that I wanted to go long on, but then we got to talking and I wanted to talk to you more than to be trading that. So that was a pretty cool one. They had earnings this morning and apparently they had good earnings and they had a pretty, I guess we had 2 to 3 last previous 3 days of selling, constant selling. So that looked interesting to go long on right at open. Um,
Yeah, the railroads, I mean, they had been doing well, but then they really have had a pullback um, the last like week or so. So if you think that we're not really, the consumer is not really slowing down, then yeah, these things definitely could be a buy. They usually all pay dividends, whether it's Norfolk Southern, CSX, or UNP. They all pay dividends. It's not a ton, but it's a little bit. It's trading at a little bit of a discount to the SPY.
that's that's pretty cool. I already know the answer to this, but I want to ask you for everybody watching this, currently or at a later time, what is your largest holding in a stock and why?
Well, my largest holding is SPY. Like in my retirement account, the largest
Yeah,
holding is SPY. I personally think that is like the best method for your longer term money is what's called, I guess I didn't actually know this, but I guess it's called a satellite approach. So like if you were to take your account and you got like this is SPY, so this is a big chunk of your account, and then I'm getting trying to get fancy with these annotations. Then it's like then over here, maybe I have like Apple or something like that, AAPL, and like that's a little satellite, and then maybe over here I have a little bit of Google, Goog, and like the bigger, if it's I don't know, let's say Square is like a little tiny circle, but my largest chunk is the S&P 500, just because it's something that I don't specifically have to worry about. Like when I hedge my longer term portfolio, it's usually puts on SPY or the Qs, but the SPY number one can't go to zero. Like the SPY is going to go to zero. That would mean the whole economy is like no more. So it'd probably be, Corona zombies or like nuclear war. And at that point, we don't
yeah,
really need to worry about our trading accounts. Like it's not going to matter anyways.
yeah.
So now don't get me wrong, the SPY can definitely have some big pullbacks, but that's why like the SPY is not down super heavy. I mean, it's down, but it's down 13% versus some of these other stocks that are down like 60, 70. I mean, even stocks like Tesla and Apple, I think are down more. Maybe not Apple. Apple's been one of the stronger ones off of its high. Yeah, about 14, 15%. Tesla's down. And it
28%.
started the year high, yeah, so it's down 27 percent. So it's like since there's rotation in different sectors, like you always get the benefit of that automatically with the S&P 500. And long term, let me actually go to the SPX because this is the actual index. You can't like individually own shares of this, but that's what the SPY tracks. But over the long term, like look at why wouldn't I want to own this? And I'm betting on the U.S. basically, and the U.S. capital markets is the best place to be. There are some emerging markets if you can pick them individually, but if you just try to pick an emerging market fund, I don't think those do very well. And then there are some companies I love, like would Apple go to zero? Probably not. But at the end of the day, any company can do anything. Whereas you get a little more of that protection when you own an index. And if the index on average returns 12% over the last like 100 years, there's a certain amount of money that I'm okay with 12%. If I just get the market return on a big chunk of my money, like I'm okay with that because the market return is pretty decent. And yeah, I'm going to try to beat the S&P by doing other things and trading other individual names, but there's nothing wrong with having a large chunk just in the S&P 500. Or if you want to do the Nasdaq, you can do the Nasdaq if you want. I think that the time of the Nasdaq Like doing what it's done
Was
the last couple
yeah.
years is probably not going to do the same thing. It's going to be a little choppier. But the S&P 500, I mean, it's hard to beat. It's hard to beat. So SPY, if you like to use options, if you don't like to use options, I would go with VU, the Vanguard S&P 500 ETF. This is the cheapest access to the S&P 500 index pretty much anywhere on the planet. It's like 0.003 um, basis points. So if you had $10,000 in there, the management fee is like $3.
Interesting.
So yeah.
Yeah. That's pretty cool. And but then you can't do covered calls against it.
Yeah, they do have options, but the strikes are not really good.
I see.
And they don't have like, I don't think they have weeklies, whereas like SPY that has much better strikes. I mean, it has intra week options. Like you can get options that expire on Monday, Wednesday, and Friday on the on the spot on the SPY. This
Yeah, I
one is
think
like 0.07. So if you had $10,000, it's going to track the S&P 500 minus, $7 basically. So it's still cheap. The only difference is like $4 per every 10,000.
I see. I think SPY, somebody I read somewhere mentioned that it's coming out with everyday expiration now.
Yeah, I think the actual index SPX
I
is doing
see.
yeah, they actually have options even that expire in the morning on certain days.
That is so insane. Yeah, that's amazing that you could do that. Yeah, because I know I trade a lot of, so I've gotten into the habit of, with the day trading rule, I can't really trade. I like to trade credit spreads a lot, and I can't really do that with SPX or SPY if I want to get in and out of a position. So I like to do that on ES sometimes, and so I will oftentimes look at ES expirations, which is the futures ticker, and it's precisely the same thing as SPY, but futures. Um, and so I will trade credit spreads on that
Oh wow.
sometimes, and that's been fun. I've been experimenting quite a bit with that, and so that's been fun for sure. Yeah, it gets really lucrative,
Well, yeah, I
and
was gonna say if you're doing what? If you're doing 10 points, a 10-point spread is how much risk on ES? Is that like 1,000 or is it 10,000?
no, so a 10-point risk essentially is just it's $500.
Oh yeah, because each point is 50. Okay, yeah.
Yeah, yeah. So if you're buying an option on ES in futures, it's so let's say a call option costs $1. It says a dollar. You're paying $50 for it. That's
Hmm.
what it. That's what you would end up paying. So yeah, and it's pretty interesting. So if it goes from 1 to 5, then you'd make 50 to 250. So yeah, it's
Yeah,
really
they have a lot
interesting.
of strikes too. So they got Monday, Wednesdays. These are the Fridays. They got some AM settled ones as well. So
Yeah,
yeah, they have
yeah,
a lot of strikes. Okay.
yeah, and it gets a lot of fun. So credit spreads, if you guys are interested and if you want to check out real life trading, we do futures trading there too. But yeah, credit spreads are getting a lot of fun over there. I've been experimenting a lot. So yeah, it's been fun out there. Well, I hate to wrap it up, but I have to I have to I have to jump off and go to another meeting. But Robert, I want to thank you so much.
Oh, it's
And
been my
and I
pleasure.
truly want to just thank you so much for sharing all this wealth of knowledge with us. And honestly, every time I talk to you, I feel like I get a little bit smarter. And and I steal your quotes all the times, and I don't give you enough credit oftentimes. But thank you so much for teaching me all I know, and just being so awesome out there.
Oh, thanks, Maloney. Yeah, it was a lot of fun. And don't worry, all of the quotes that I use, I took from someone else. So and probably didn't give them credit either. So that's okay.
Oh man. Well, thank you so much. This was a wonderful conversation. I truly enjoyed it. And I'm sure everybody watching out there will absolutely love it and find some value in it. 100%.
Awesome. Thanks so much. Have a great rest of the day.
Thank you. You too.
All right.
Bye.